Hi, welcome. It's Mary Ellen McGonigal with your weekly Ed Show for Saturday, September 18th. Today, I'm going to be talking about some of the more impactful news that came out last week and what that might mean for the broader markets. And then from there, we'll go ahead and take a look at that S&P 500 and see how we closed the week. In addition, there were pockets of strength. It was a rather weak, certainly downward trending type of a market last week overall. However, there were some clear-cut pockets of strength that look really quite compelling. And then from there, share with you some stocks that are also looking very interesting. Before that, let's take a look at those news headlines. First up, we did see the Consumer Price Index was released on Monday, and it was at its lowest level in 7 months. And this was good news. It just implies that inflation may be peaking. Again, would be very constructive, not only for the markets, but for the economy. Also, industrial production came out. It did increase for the 6th straight month. That's telling us that the U.S. economy is continuing to expand, which is good news as well. Weekly jobless claims did come in a bit higher than anticipated. That was on Thursday. That had a bit of a wobbling effect for the broader markets, but also we did see retail sales numbers for August surged. And this is good news because the consumer spending is 2/3 of U.S. GDP. So we want consumers out there spending to point toward continued economic expansion. And then Friday, consumer sentiment came out and it did dip lower. It already had a pretty significant decline in August. So to see that dip even lower caused, again, volatility. The markets were down on Friday. Of course, it was also triple witching. So that also pushed the markets around quite a bit. China came out. They reported weak economic data. And we're talking about global economic growth. This is not good news, so we are getting cross currents as it relates to U.S. versus global economic growth. Next week, the Federal Reserve is going to be meeting, and there will be a news conference. Fed Chair Powell will be speaking, as well as an FOMC statement prior to that, both taking place on Wednesday. So that's going to be paid very close attention to. Monetary policy is the primary driver of the broader markets. So investors are going to be on the lookout for any kind of hint that the Fed may taper their very generous monetary policy. So from here, let's go ahead and take a look at the broader markets. And here is a daily price chart of the S&P 500. And the broader markets, you can see, are just generally drifting lower. The S&P was down about 0.6% for the week. The good news is it closed above this red 50-day simple moving average. This is an area of support, and it is holding at this point in time. And we can go back historically and see that the S&P has had these periodic pullbacks to the S&P 500 before resuming its uptrend. We can take a look at some of these outside momentum indicators, and the RSI is negative and trending downward. That presents a bit of certainly a yellow flag at the very least. The stochastics, a faster moving momentum indicator, trading now negatively below 50. However, it did get into oversold position, so we're on the lookout for a bounce out of that oversold position into an area that would be above 50. That would be constructive. Also, if the index were to trade back above these shorter term 10 or 21-day simple moving average, that would also be constructive for the markets. And again, keeping an eye on that 50-day if we can hold firm and ideally trade higher. Next week, of course, we'll provide more clues as it relates to the backdrop of the broader markets. From here, I always like to take a look at the underlying sectors, those 11 sectors in the market. Here we're looking at a 2-month daily price chart. I've gone ahead and added this RSI, that's a relative strength indicator, sorted it descending. I want those stronger groups up here on the upper left quartile. and take a look. Consumer discretionary up here in the forefront. It was the second best performing, up 0.6% versus the S&P that was down 0.6%. So generally, again, holding up that retail sales number helped, but also helping the consumer discretionary space is the fact that Amazon and Tesla, very heavyweight names, both posted minimally but positive closes for the week, so that helped keep the consumer discretionary sector up here as well. Also, energy had a very nice downtrend reversal take place as it broke back above this 50-day simple moving average. We'd like to see a little more in the way of a follow through to confirm that energy is back in favor, but the RSI still remains above 50, and then that MACD just dipped up into positive territory, so we're looking good there with energy. I did do a blog for Simpler Trading earlier this week all about energy with stock selection as well, so you'll want to take a quick look at that. Also, as we move on, taking a look at some of these other underlying sectors, let's take a look at technology. That has been a clear-cut winner going into this month, but it is in line with the markets drifting lower. This RSI has now dipped into negative territory, and we can see a general downtrend here. This is a moving average, convergence, divergence, MACD. Similar to the S&P, it is finding support at that 50-day, which we would ideally, of course, like to see. We're going to take a look because tech is an area where there were pockets of strength, and then from there share some charts, some individual stocks. So also, as we are looking at the sector view here, we can see that industrials and basic materials really fell out of bed, so to speak, broke below key support, a lot of that due to those China numbers and other global economic reports. So from here, we can go ahead and drill down even further beyond those sectors. We want to get into those sub-industry groupings, always with an eye toward looking out for that relative outperformance. That's where you want to be if you are going to be putting any money to work. So first up here is crude oil, and Brent crude oil in particular. Up here, $75 and very close to hitting a near-term high in price. This is constructive for energy stocks. Of course, higher oil prices will help drive higher profit margins, particularly for those oil-producing companies. So we can see the RSI and the MACD also both in positive territory with oil pricing. And then as we move on, I wanted to point out in technology, semiconductor stocks were up about 0.2%, but certainly they were not down for the week. They're retaining their general uptrend, and there are definite pockets of strength within semiconductors. Another area that held in relatively well is software stocks. Here's IGV. This is the tech software ETF, and we can see that it pulled back and is potentially turning bullish again. We wanted to see the IGV break back above that 10-day simple moving average, and we can see more recently that software has posted a new high, pulled back, recovered, then pulled back slightly, and so on. So ideally, we would like to see that break above that 10-day and a resumption of that nice near-term uptrend. Lots of great-looking stocks. Certainly on my MEM Edge report, we had a number of names that posted a new high and are poised to trade higher going into the coming weeks. So from here, what I did want to do is go ahead and share with you a couple of stocks within the semiconductor industry group that look really quite interesting here. So here we are looking at KLA Corp. It's a very large semiconductor company. KLAC is the ticker symbol. And what I did want to point out to you is last week, the stock broke out of a nice 6-week base and has continued to trend higher. We can also see that this MACD, that nice black line up through the red, signaling that an uptrend is in place, as well as a positive RSI. And this price action really would not give you any hint that the broader market suffered. So again, with an eye toward once the broader market pressures lift, KLAC is poised to be a leadership name in this space. One other leadership name among semiconductor stocks is Lattice Semiconductor, LSCC, and the stock has proven that a pullback to its 10-day simple moving average, this green line, has been an ideal entry point. The stock is very much in an uptrend. You can see the RSI and the MACD both trending upward and poised to trade higher. I'm going to leave it at that. Everyone have a great rest of your weekend. If you haven't already, go ahead and use that button below to trial my MEM Edge report for a nominal fee. You'll have immediate access to the current reports as well as receive this Sunday's very updated report as well. Take care. I will see you next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.